August 12th, 2025. China Evergrande Group, once the largest real estate developer in the world, is delisted from the Hong Kong Stock Exchange. Shares that once peaked at $4 fell to $0.02, a loss of 99.5%. At the beginning of the 2020s, thousands of retail investors, as well as banks, suppliers, and foreign investors, were owed by Evergrande alone 2 trillion yuan, equal to $310 billion. $310 billion of debt, the largest developer bankruptcy in history. But Evergrande is only the tip of the iceberg. Dozens of other giants collapsed after it. Country Garden, Vanke, Shimao. The entire Chinese real estate sector, 30% of China's economy, is in freefall. The question worrying the entire world is this: is this Lehman Brothers 2.0? Will Evergrande bring down the global economy? Today, we will examine 3 things: how Evergrande built the largest financial pyramid, why the entire Chinese real estate market is collapsing, whether this threatens the global economy, and what happens next. The rise of the Evergrande Empire. 1996, Hui Ka-yan founds Evergrande in Guangzhou. China is urbanizing. Hundreds of millions of people move from villages to cities. Demand for housing explodes. The government privatizes housing. Previously, the state provided apartments to workers. Now you must buy them yourself. Evergrande builds and sells apartments to the middle class. The model is simple. Pre-sales. Buyers pay before construction begins. Evergrande receives the money, builds the building, delivers it, then receives more money from new pre-sales and builds the next project. As long as prices rise, the system works. 2009. Evergrande lists on the Hong Kong Exchange. 2016, it enters the Fortune Global 500. After listing in 2009, Evergrande became one of the hottest stocks in China, and the company's market capitalization peaked at $51.7 billion in 2017. 2018, the most valuable developer in the world. Hui Ka-yan becomes the second richest person in Asia, net worth $42 billion. But behind the growth was a pyramid. Evergrande's success was based on a vicious cycle. Evergrande continued to expand by using new borrowed funds to repay old debts. The survival of the business depended on ever-rising housing prices and constant market liquidity. A classic Ponzi scheme. You take debt from a bank for a project. You sell apartments before construction begins. You receive money from buyers. Part goes to construction. Part goes to paying old debts. You take new debt for a new project. You repeat. As long as prices rise and buyers exist, everything works. Once it stops, collapse follows. In addition, Evergrande spent recklessly. The company generously invested in a football club, an electric vehicle company, a bottled water business, and Fairyland theme parks to compete with Disneyland. The Guangzhou Football Club, purchased for hundreds of millions. Evergrande Auto, electric vehicles intended to compete with Tesla, with investments of more than $10 billion. Evergrande Fairyland theme parks, bottled water, pig farming. Diversification? No. Desperation. When the core business slows, you look for new sources of money. The scale of the empire. Evergrande, once boasting annual construction of 72 million square meters, filed for bankruptcy protection in August 2023. 72 million square meters per year. That is 720,000 apartments of 100 square meters each. Every year, the 30 largest Chinese developers on average built in 80 cities in 2017, compared with an average of only 5 cities in 2003. Evergrande grew from construction in 25 cities in 2009 to construction in 228 cities in 2018. 228 cities. Evergrande was everywhere. 1,300 projects at various stages of construction. Millions of buyers waiting for their apartments. The 3 red lines, the beginning of the end. August 2020. The Chinese government introduces the policy known as the 3 red lines. Chinese regulators attempted to curb excessive borrowing in the real estate sector beginning in August 2020 by limiting ratios of debt to cash, debt to assets, and debt to equity for developers through a set of restrictive guidelines called the 3 red lines. 3 conditions. Debt to assets must be below 70%. Net debt to equity below 100%. Cash to short-term debt above 1. If you violate all 3, you're banned from new borrowing. Evergrande violated all 3. Leverage. The ratio of debt to equity was extreme. The government said, stop inflating the bubble, deleverage. The problem is that it is impossible to deleverage when the entire business is built on debt. Evergrande tried. It sold assets. It searched for investors. But it was too late. September 2021, default. Evergrande missed interest payments on its dollar bonds. The company was downgraded to restricted default by the American rating agency Fitch in December 2021 after missing 2 interest payments on dollar bonds. The domino effect begins. Investors panic. Banks stop lending. Buyers stop buying. 2021 to 2022, Evergrande records cumulative losses of $81 billion over 2 years. Millions of buyers trapped, people paid for apartments that were never built. Evergrande has no money to complete them. Across China, there are unfinished towers, ghost cities. Thousands of people protest, demanding their money or their apartments. The government tries to force Evergrande to complete projects, but there is no money. January 2024, liquidation. On January 29, 2024, a Hong Kong court ordered the liquidation of Evergrande. The company failed to present a realistic debt restructuring plan. The court said, "Enough, liquidation." Hong Kong liquidators stated in a document earlier this month that Evergrande's debt burden was far greater than previously estimated, and that any comprehensive restructuring would be unattainable. Evergrande's debt pile amounts to $45 billion, significantly higher than the $27.5 billion in liabilities disclosed in Evergrande. AS financial statements for 2022. The debt was not $300 billion as previously thought, but much larger. Evergrande falsified reports for years. In 2024, the China Securities Regulatory Commission issued a fine of 4.2 billion yuan, approximately $584 million, to the firm's subsidiary Hengda Real Estate Group Company for violations, including falsification of financial records. Huai was fined 47 million yuan, equal to $6.5 million, and permanently banned from China's securities market. Chief Executive Hui Ka-yan was arrested in September 2023. Fraud charges. A man who was once the second richest in Asia is now in prison. August 2025, delisting. China Evergrande Group received a letter on August 8th from the exchange, notifying the firm of the decision to cancel its listing because trading had not resumed by July 28th. The final listing day will be August 22nd, and Evergrande will not apply for a review of the decision. The shares were worth $0.02. Now they are worth nothing. Ordinary equity investors will be the biggest victims of this delisting. Millions of retail investors lost everything. Country Garden, the next victim. Country Garden is the largest private developer in China, bigger than Evergrande. Country Garden, whose annual housing production was approximately twice that of Evergrande before the pandemic, declared default in October 2023 and faced a liquidation petition from its creditor the following year. August 2023. It warned of a massive loss of $6.25 billion for the first 6 months. Default. Liquidation approaching, with the hearing postponed until January 2025. China Vanke, the state giant, is also falling. Vanke is one of the largest developers and is partially state-owned. It was considered safe. In March, the state developer China Vanke Company reported a record loss of 49.5 billion yuan, equal to $6.8 billion, for the year 2024. In January 2025, Chinese state media reported that authorities detained the company's chief executive officer, and that the company itself could face a takeover or reorganization. Even state developers are not protected. The scale of the crisis. After several bad years, Evergrande defaulted on its debt in 2021, triggering a domino effect across the country's real estate sector. Dozens of developers have gone bankrupt since 2021. Shimao, Kaisa, Fantasia, Sunac. The list is long. Evergrande, once China's largest developer by sales, will now be remembered as the most indebted developer in the world, with more than $300 billion in debt, whose default set off a broader multi-year crisis that has weighed heavily on the country as economic growth. Property prices are collapsing. From the peak in 2021 to today, housing prices have fallen by 35%, minus 35% on average. In smaller cities, minus 50%. In the suburbs of major cities, minus 50%. Even in the centers of Beijing and Shanghai, minus 30%. In August 2024, China reported the largest year-on-year decline in property prices in 9 years, and the decline continues. Home sales have collapsed. China's real estate bubble peaked in 2021 and has been deflating since. The volume of new home sales has been cut in half over 4 years, minus 50% in sales. People are not buying. Why? Fear. They do not want to pay for unfinished apartments. Poverty. Prices have fallen, people feel poorer, and they spend less. Trust only in the state. There is now a clear flight to safety, with buyers preferring state developers and completed properties rather than pre-sales. Why is the entire sector collapsing? Systemic causes. Cause 1, a debt-based business model. It was not only Evergrande that used this business model. The entire sector pursued scale, growth, and leverage. All developers worked the same way. They borrowed, built, sold, and borrowed again. When the government said, stop borrowing, everyone got stuck. Because 2, local governments depend on land. Due to financial reforms in previous decades, local governments became increasingly dependent on infrastructure development to generate revenue through local government financing mechanisms. Because of the financial benefits from selling land use rights, land values became central to the financial security of local governments. Local governments in China do not have the same taxing authority as the central government. How do they earn money? They sell land to developers. Governments bought land from farmers for next to nothing and sold it to developers for millions. The difference became revenue. 30 to 40% of local government revenues came from land sales. When developers stop buying land because they have no money, governments lose revenue. A budget crisis follows. Cause 3. Chinese households store wealth in real estate. In China, there are no good alternatives for saving. The stock market is unstable and manipulated by the state. Banks offer low interest rates. Cryptocurrencies are banned. Foreign assets face capital controls. The only reliable store of value is real estate. Apartments always rise. Between 2003 and 2014, housing prices in China grew by more than 10% per year after inflation. The rise in Chinese housing prices was much greater even compared with the United States during the housing boom of the 2000s. Chinese families invested 70 to 80% of their wealth in real estate. When prices fall by 35%, people feel poorer by 25 to 30%. They stop spending. Cause 4. Market concentration. Research found that the industry became increasingly concentrated, with large firms taking a growing share of the country's housing production, which played a significant role in the market downturn. The 10 largest developers controlled 40 to 50% of the market. When they fall, the entire market falls. Small developers cannot replace the giants. Impact on the Chinese economy. Real estate equals 25 to 30% of China's gross domestic product, directly and through construction materials, furniture, household appliances, and related sectors. The chief economist for Greater China at KKR, Chang Chunhua, estimates a smaller hit of 1.5 percentage points to China's gross domestic product in 2025, compared with 2.5 percentage points in 2022. The real estate crisis subtracts 1.5 to 2.5% from gross domestic product growth each year. China targets growth of 5% per year. Without the real estate crisis, it would have been 7 to 7.5%. Consumption is collapsing. Many Chinese homeowners feel poorer and spend less than before. Retail sales, used as a proxy for consumption, grew in July by only 3.7%. This is slower than the pre-pandemic levels of 7 to 8%. Consumption growth has been cut in half. People are frightened and are saving money. Comparison with Lehman Brothers. Many compare Evergrande to Lehman Brothers, whose collapse in September 2008 triggered the global financial crisis. Some already compare the potential collapse of Evergrande to the collapse of Lehman Brothers in 2008, which foreshadowed the Great Recession. The financial giant Lehman filed for bankruptcy on the 15th of September 2008 with $613 billion in debt, triggering a banking collapse that sent the already recession-hit United States economy into a downward spiral. Similarities. Enormous debt, more than $300 billion. Systemic importance, the largest player in its sector. Built on risky assets, real estate. The collapse triggered panic. Differences, why Evergrande is not Lehman 2.0. Difference 1, geographic isolation. Lehman was global. American and European banks held its bonds and derivatives. When Lehman collapsed, all banks suffered losses at the same time. Evergrande has more than 90% of its assets in China. Evergrande, founded in the mid-1990s by Hui Ka-yan, had more than 90% of its assets on mainland China. Foreign investors hold part of the debt, but nowhere near as much as in the case of Lehman. Difference 2, government control. Thanks to government policy, the market is experiencing a soft landing, and there was no major crisis caused by Evergrande. The Chinese government controls the banks. All major banks are state-owned. The government can order banks not to panic, to continue lending, and to write off losses. In the United States and Europe, the government cannot order private banks. There, the market decides. China is a command economy. The government can prevent financial panic by force. Difference 3, capital controls. China has strict controls on capital movement. Money cannot simply be taken out of the country. This isolates the crisis within China. Money does not flee abroad, triggering global panic. Difference 4, slow unfolding. Lehman collapsed over a weekend. Evergrande has been falling for years, since 2021. A slow collapse gives the government and markets time to adapt. There is no shock. Global impact exists, but it is limited. Impact 1, slowing of the Chinese economy. Although the collapse of Evergrande is unlikely to have an immediate impact on American consumers, it is another indicator that China's economy, which accounts for around 20% of global gross domestic product, is experiencing a painful period of slowdown, which could lead to slower global growth in the future. China equals 20% of global gross domestic product. If China slows, the world slows. But not a collapse, just slower growth. Impact 2, commodities. Real estate is a massive consumer of steel, cement, copper, and aluminum. A decline in construction leads to a decline in demand for raw materials, which leads to falling prices, and exporting countries such as Australia, Brazil, and Chile suffer. Impact 3. Trade. Chinese consumers spend less and therefore buy fewer imports, hurting exporters. But China tries to compensate by exporting more. Because domestic consumption in China is weak, more companies are going abroad, which has caused trade tensions. The United States and Europe accuse Chinese firms of dumping excess inventories at prices below market levels. China produces too much, factories are running, but people do not buy domestically because they are saving. Where do the goods go? Exports. The result is trade wars, tariffs, and rising tensions. Impact 4. Investor confidence. If the largest developer in the world can falsify reports for years and go bankrupt, how much can other Chinese companies be trusted? PricewaterhouseCoopers approved Evergrande's financial statements in 2019 and 2020 and was fined $62 million. In September 2024, Chinese authorities banned the accounting firm PwC for 6 months and fined the company more than 400 million yuan, equal to $56.4 million. Even PwC, one of the big 4 auditing firms, did not notice or ignored the fraud. Investors are now cautious about Chinese assets. Forecast. What comes next? Scenario 1. Managed decline, the most likely. Although the risk of new developer defaults has declined, consolidation around state developers appears inevitable as the multi-year crisis has made homebuyers more cautious than before. The government nationalizes the sector. State developers absorb private ones. Many of these large developers, which will soon become zombie companies, will eventually be incorporated into the state apparatus. State developers will ultimately manage the entire industry. Private real estate is dead. The state controls everything. Construction continues, but at a slower pace. The government completes projects of bankrupt developers. Buyers eventually receive their apartments after years. The economy grows more slowly, 4 to 5% instead of 7 to 8%, but it does not collapse. Scenario 2. Deflationary spiral, medium risk. Property prices continue to fall. People feel poorer. They spend less. Companies earn less. They lay off workers. Unemployment rises. People spend even less. A spiral. China enters the Japanese scenario, decades of stagnation after a burst real estate bubble. Global growth slows. The world economy enters recession. Probability 25 to 30%. Scenario 3. Systemic collapse, low risk. Banks holding the debt of Evergrande and other developers begin to fail. The government cannot save everyone. Panic spreads. Chinese citizens try to move money out of the country. Capital controls tighten. A black market for currency emerges. The yuan collapses. Global panic. Lehman 2.0, probability 5 to 10%. The Chinese government is too strong and too controlling of the economy to allow this. What should investors do? Avoid Chinese real estate, obviously. The sector is dead for years. Be cautious with Chinese stocks. Companies dependent on consumption, retail, automobiles, luxury goods will suffer from falling demand. Exporters, technology, and manufacturing may benefit if they export more. Watch commodities. A decline in construction in China leads to a decline in demand for metals. If you hold mining stocks, be cautious. Diversification. Do not keep everything in assets dependent on China. China equals 20% of the global economy, but not 100%. Watch government actions. The Chinese government will intervene. Stimulus, rate cuts, infrastructure projects, nationalization of developers. If the government acts aggressively, risk declines. Final thought. Evergrande is the largest corporate catastrophe in history. More than $300 billion in debt, millions affected, a symbol of a burst bubble. But this is not Lehman Brothers. The Chinese government controls the situation. Banks will not collapse. The financial system will not fall apart. However, the consequences will be long-lasting. The Chinese economy will grow more slowly for years. Global growth will slow. Trade wars will intensify. Trust in China has been undermined. The correction of China's housing market remains an ongoing headwind. Although we forecast a smaller drag over the next few years, this impact will continue to ease to just 0.3 percentage points by 2027, according to CNBC. The crisis will not end quickly, but it will not destroy the world. The question is not whether Evergrande will collapse the global economy. The answer is no. The question is how much it will slow it. The answer is noticeably, but in a manageable way. China is too important to collapse. The government is too strong to allow chaos. But the era of insane growth in Chinese real estate is over forever.